Since my early 20s, when I bought my first house, I've invested in 11 different countries around the world. And a lot of times I made really, really good money. Sometimes I did okay money, but sometimes I lost money. Today's video, I'm going to tell you about all the times I lost money and looking back, what was the mistake I made and how I can help you, if you're just starting your journey or if you're already sophisticated, how to avoid the same mistakes. Hi, this is Jeremy from the Millionaire Migrant. I help entrepreneurs and investors avoid costly mistakes in their global strategy. A strategy that could be around tax, companies, entrepreneurship, real estate, citizenship, passports and residency, whatever it may be. But I have over 2 decades of experience in this, and now I have a team that provides me with up-to-date information from everything that's happening around the world, which we then scrutinize so that I can share that information with you, as well as my life lessons and all the mistakes I've made so that you don't make those mistakes yourselves. The path to financial freedom, if you listen to anyone on YouTube who's trying to sell you a course, is very simple. You just buy it, click it, and then magically you become 10 times smarter. Unfortunately, real life is not like that. You have to learn a lot of lessons. And I have had so many lessons in 2 decades of investing in multiple countries around the world, completely different asset classes. And a case in point is yesterday. Even yesterday, I had to go and see my contractor to do what is commonly known as a shakedown because I was really annoyed with what had been going on and I needed to, let the guy know exactly where we were. Ultimately, he came out with a positive conclusion. I got what I wanted. He didn't even get anything close to what he was looking for, but it didn't have to reach that point. My wife did say to me at the beginning, you need to don't be cutting corners, don't try and be cheap. And there was the part of me who was like, listen, love, I know what I'm doing. But yeah, as you can imagine, last night she was just staring at me saying, next time, listen to me. So essentially what I learned was how to deal with contractors. Now I have had positive experience with contractors, but ultimately there are contractors for commercial, contractors for residential, and that is where I fell afoul. Lesson learned, another lesson for me to learn that I can share with you. And I'll do other videos about that. I'll be running a series about all the properties that I have invested in, where I made money, where I made okay money, where I broke even, and where I lost money. Talking about losing money in property, sometimes you just have to lose the money to be able to understand why it happened and how you could avoid it in the future. And because I have lost money, I'm in a better position. I actually helped one of my clients to buy a property that made him 150%, give or take, capital gain on his property. And by the way, if he took leverage, he would have done even better, cash on cash. 150% return in around 18 months. And the reason he did it with me is he said, why should I do it with you? And I said, because I've lost money in real estate. And do you know what he said back to me? He said, you can lose money in real estate in Dubai? Because everyone's telling him you can make money, I was the one who said you can also lose money. He went with me and the proof is in the pudding. Some of the ways that people lose money I'll do a guide about it just so I can put everything in one place. I've got all these paper and I'm writing notes, everything. But essentially, you need to have a very clear plan. It goes without saying. You also need to do your due diligence. What a surprise. But there are some things that really happened around research. Research is something you do at the beginning and you just need to be patient. Just because everything's going up and it's hot, you just need to be as cool as you can because you don't want to rush into something and get it wrong. Now, the mistakes you can make on properties are numerous and it's better I go through in another video. But just to list through some of them. The first is you need to have a clear plan. Like be very, very clear on that plan and then just be focused on that plan. You need to be really starting from a very high level. So it could be as simple as which country you want to do. It could also be simple as what's your budget. So you stay within the budget and stay disciplined. You also need to be realistic. A lot of people, you have to understand in real estate, you're either dealing with a real estate developer or a broker. Those people are highly incentivized, depending on the food chain, but they're less incentivized at a higher level, but at a lower level, they're more incentivized. They're largely probably commission only, to be honest. But those people there will always give you a reason to buy. They will very rarely give you a reason not to buy. This is something that you will notice on a daily basis. The best brokers I have used, and yes, a lot of brokers aren't happy with the videos I'm doing right now, but it's not that I don't like brokers. I just like good brokers. Good brokers are people who give you truly impartial advice that is actually against their best interests. That's the broker you want to listen to. Right? You need to be realistic. So when I say realistic, it's like don't give me pie in the sky capital gains. No one can forecast what can happen. No one can forecast the Trump tariff. No one can forecast the global financial crisis. So try to focus on what is attainable in a worst case scenario, which is yield. I always do everything based on yield. If I get capital appreciation, that's great. But largely speaking, one of the reasons why properties increase in prices is many different things as supply and geopolitics and what have you. But one of the reasons it goes up is because it's a good idea to buy. So it could be a good idea to buy because because your rent is so high, so it makes better sense to buy the property. But another reason is that if your rents are going high, it makes a better idea as a landlord to be able to take advantage of this, because the correlation between your yield and the property price is getting higher, closer up to double digits, I would say, or maybe not so much double digits, but between sort of 5 to 10, globally speaking, is very attractive. 5 and 6 is not so attractive, but anything that's 7, 8, 9, and 10, and obviously you can go higher, but that suddenly means that more people are buying property, and that is a reason. So if you just focus on yield, everything works back from yield. You also need to do your research. Again, you've got now there's a lot of countries, but I can give you a few anecdotes. But in the UAE, you have a lot more data to be able to choose property than you didn't have before. Some of them are paid, some of them are free, but you can see transaction volumes, you can calculate price per square foot, and then you can start to see trends if you're buying at the right price. So I'm selling 2 properties right now, which are very, very close or above what is the price for that market. And the reason being is because I was looking at all the data, trying to figure out the best time. Another thing is that if you go in other countries, foreign countries, sometimes they don't have MLS or multi-listing systems, which you have in the US, and you have your Zooplas and Zillows. I bought property in Colombia, and there it's very difficult to try and get a lean on what a property is really worth and what's happening in the market. But by doing due diligence on the ground, you can find a lot of information. And this leads me to the next point. Try to visit that part of the world at the very least, and try to go to the location specifically in that country where you want to be investing. So when you're on the ground, you talk to brokers. I mean, developers will only tell you that their project is the best, so you won't really get that much information. Brokers, the reason that you should be using largely a broker, unless you already know the development that you want to buy from, is that they should be more impartial, because they're not usually tied into one project. It doesn't mean that you should follow them blindly, but they're more impartial. The next thing is you want to do is also get involved in investor clubs or groups or communities. Go online. You've got Reddit, you've got Facebook groups, and all different types of places, school and so on. But you can also, when you're on the ground, you can also find people that are connected to the Chamber of Commerce or to the embassy. So you could have lawyers, you could have investment groups, realtors. They sometimes have preferred lists. The next thing is micro and macro. So you need the macro, which is at a top level where you understand the dynamics of that country, why it's attractive, what are the nationalities of the people investing there, what do they typically go for in terms of asset class, which are the areas that are doing well, is there a new airport being built, is there new infrastructure, is there freeway being built, that type of stuff. Then the micro is going to be when you're in that country starting to zone in on a place. So for example, when I was in Medellin, we knew we had a strategy that we wanted to go to Laureles and Poblado. If we were going to go to Paraguay, I think we're going to have a look at Nueva Asunción and another area. But if I use it in London, we knew that there was kind of southwest London between the Commons is a place where you get a lot of mass affluence. In the UAE, the worst property I bought that I didn't make any money was in JVT. The best was in a place that, if I told you, I'd get loads of callers from loads of brokers every single day. Next up, you need to do the calculation. So once you've identified where you want to be, you need to run the numbers. So you use all the data that you're getting. You'll go into the different the forums where you can hear information. But once you start to get all the data from your MLS or your whatever is the system that they have, the Zillows and Zooplas, you can get that information. Then you need to run the numbers to know that when an opportunity is there, that you can pull the trigger, which I hope at that stage you have your mortgage in place and you have your cash in place and the worst case scenario extra budget that you need as well. When it comes to the mortgage, the thing about the mortgage is that this is something that really helps you to get very good returns if the rate is good. Now, a lot of people are saying the rates are high, but historically they're not that high. They were obviously a lot better when it was 1% and you could fix it and so on, but it's still at 4%, largely speaking, in US dollar terms. In UK, it's a bit higher than that. Euro, it's a bit lower. But largely speaking, if you're getting a yield at 10%, then this is something that you want to look at taking mortgage because of the differential. Don't make the mistake that I did when I bought in Poland, where I was very young and I bought a property with a Swiss franc mortgage. At the time was perfectly fine, except that after the global financial crisis, Swiss franc went through the roof. And if you think about how much that impacted my mortgage repayments, we were not doing well at all. I ended up selling the property, still made a profit, but if I hadn't used that foreign currency, I was too young to have cash. I mean, I was in my early 20s, but I would have come out very, very well. The numbers are very good, and I'll be doing a video about that in the coming weeks. Talking about FX, you also need to understand how this may play into the whole factor. Sometimes investing in emerging markets could really help you knowing that you're earning in euros and dollars. So this is another component that you should consider when investing. Always make sure to identify all the hidden costs and try to stay out of all the hype. The hype sometimes is your biggest enemy. Try to be as patient as possible. there's always going to be another opportunity. If I look back on all the opportunities I missed, I missed the opportunities, but I also took advantage of really good opportunities. The whole idea is you just take a little bit of exposure and then don't beat yourself up that you didn't do 2 or 3, because the future can never really tell. You want to stay diversified as much as possible. One that I didn't do was one that I bought a property, which comes back to my point about being patient. I had a lot of money and I thought, okay, let me invest. Didn't do enough research. I saw that a mall was being built in the UAE. It was in JVT. And I thought, okay, this is fantastic. That's going to really help a lot. But the reality is, how many people actually walk to a mall? Everyone drives to a mall and they only want to go to good malls. But the mall that we're looking at in JVT, apart from the fact it ended up taking a lot longer to get built, but there was like 3 other malls nearby as well. But the fact is that the entry to get in and out was really poor. And I just didn't do enough research on the property. It looked like a good deal on paper, but I just didn't run the numbers. That was really the big problem. And okay, there is a lot more information now than I had when I bought the property, which would have been it was before COVID, probably 2018, 2017, something like this. I ended up selling the property for about 30% of the value that I paid for it, 30%, 30. Now, in the grand scheme of things, it was about 900,000 dirhams. So it wasn't too bad when you calculate that 4 years I had it was rented out, so you collect the rent in it. So from that 300,000 dirhams loss, I was probably down 100,000 dirhams, which is about $25,000 to $30,000. But the thing is, I looked at that property recently, so I don't know, 2-3 years after I sold it, and I see that it still hasn't even reached the price, way below the price that I bought it for. So in the end, it's like, yes, I did crystallize my losses, but I took that money, bunched it up with something else, and then bought something that way outperformed. So I just knew when to cut my loss and just get out of it, and that is the worst property investment I have ever done. There's other examples where I did go into very emerging markets with people who I thought that were trustworthy, with some friends of mine, and we didn't even get anything. We didn't get the title deed. That one I lost about $50,000, and that was a definite lesson in just thinking that your friends are already more advanced in doing it and doing the DD. You should also do your DD, because if you're just saying your friends are doing it, don't assume that they've done as much DD as you would be comfortable with. I also have missed opportunities and regrets, and one of them is I bought an office in JLT. I bought it at a really good price. I'll be doing a video about it, and then I flipped it, and I could have just sat on it and rented it out and got, probably 10% yield is kind of the norm for commercial. You should be looking at. There's always a correlation between the yield. It's always around 10%, 9.5%, 9%. And I should have stuck on it, but in the end, my concern was the tower. It was probably the weakest, or one of the weakest towers in JLT. And so I just thought, you know what? I flipped it. I made 100% clear profit, net of all closing costs and everything. And I was like, you know what? You just never know when the market is there. And I had other offices as well, so I sold that one. Hindsight, looking back, it's been a year and a half now. Probably should have kept it, could have sold it for more, but in the end, sometimes as part of the overall plan, you want to have some stuff that you keep, other stuff that keeps you liquid. Real estate is not a liquid asset. Today it's great, it's all going up, but if tomorrow things get really bad, they're not easy to sell in a dying market. So this video is for people who are first-time real estate investors, people who are nervous about taking the leap, or someone who's already bought their own property and now wants to buy an investment property. You're talking about people who want to be looking internationally. Maybe you made a lot of money in the UK and you're looking for another country, or the US, you're looking at another country. You also have the standards that if you did make a lot of money in that country, you were probably buying in the same area that you already knew. The minute you start to go to another country, it's a whole different ball game, and I've done it over 10 times now. And largely speaking, I have made good money, sometimes okay money, but largely I'm in double-digit yields and double-digit capital gains. But as I've mentioned, there have been times that I have lost money. So if you're looking at emerging markets, international markets, you just want to start getting a rental portfolio and trying to build residual passive income and a property that is an asset that is essentially going up in value every single day, just like crypto, just like gold, because the more that money is being printed, everything is going up anyway. But if you want a second opinion before you pull the trigger on something, you just want to speak to myself or any of my team. I have a real estate team here, the international and the local in the UAE. let us know if you want to get in contact with us. I'll be doing a series of videos that will be talking one by one on every single transaction, the story behind it, the good, the bad, the ugly. And if you do think that this is worthwhile and you'd like us to look at countries that you're interested in, that somebody messaged me the other day, is like, can you do one about, I think it was Canada and UK? I can do UK, no problem. Canada, I don't know anything. I'm not going to pretend I know Canada. And I haven't been to Canada anyway. So that's largely what we're going to be doing. It's going to be coming out as part of a series. I hope that you enjoyed this video. If you do, please give us a thumbs up and a subscribe and a share. And then I look forward to seeing you on the other side.